Oh, hello everyone. I'm just getting up. Oh, that was. I'm so tired. Still tired. And, but it's so nice here. Oh, so, I'm still in Southern California. Um, Here I show you the view from the balcony. Oh, it's difficult to see the ocean here. And so, yeah, about trading. Let's talk quickly about trading and what what happens and what's the problem about it. It's first of all, there's this guy. His name is Michael Lewis. He's a great journalist. He writes bestsellers about Wall Street, and he wrote a new book about that the stock market is manipulated because you have all these high frequency traders, and they get ahead of every normal investor that buys to try and to sell, and sometimes it's just a part of a second, and so they jump a front ahead of you, the high frequency traders. That is I think that is ridiculous. That is like front running, and it's kind of legal. It's done for many years, and billions are made with it. And so you think about that. A bank has your information about your order ahead, and so they can use the information of all their clients, what they buy, what they sell, and they can misuse it. They can sell that information, they can trade on it. That was kind of in the past. I think it was made, and Michael Lewis' book says it. It's called Flash Boys. Flash Boys. Clearly, there was something going on, and investigating. The government is starting to investigate, and some banks are in trouble for it. So that's a problem, the front running, and that other people have information, they have access, what you are going to do, they know before a retail or a professional investor buys. There are other people and resources, they know more than they do, or at least they know it before the trade will be performed. And then trading itself, I mean, it's short-termism. I'm more a friend of long-termism. I think long-term and act long-term, and I think it doesn't pay off almost nowhere in life. It is a silly thing to act in to go after this short-term thinking and have short-term goals and stuff. I think life is much better when you act long-term, and I'm a huge fan of that. Also, what I said before, I'm a fan of being frugal, not to waste money, not to be lavish and showy in spending. I'm not a fan of status symbols, even though I like to travel. It's also based related to my job. So yeah, so trading is a problem because there are other people ahead of you, and then there's another problem is you don't know short term where the market will go. So it's overconfidence, probably. It's kind of gambling. So there are many studies done that show that it doesn't pay off. It doesn't pay off after transactions, costs, and everything. It's like playing Lotto. It's a stupid thing. It doesn't pay off. Half of the fees for playing gambling Lotto is going to the government. It's called a dumb tax for the stupid people. Lotto doesn't make sense. The possibility, the chance, the odds are so stupidly. It's idiotic to just even think about playing. And then the same thing with Las Vegas. I mean, most people, the average, loses money. The casinos are multi-billion dollars rich. They make enormous money, and it's also a stupid thing actually to have to go into a casino. because it's almost guaranteed that you will lose long term. Yeah, and a lot of things are like this, and you shouldn't have this fantasy of becoming rich with these things. It's I think people get lost with that stuff, and yeah, just think long term and invest long term, and then I think you can do very well. Okay, bye.